If you want to know where crypto is actually headed in 2026, you don't look at Twitter threads. You look at who's managing the money. Bitwise just released their top 10 crypto predictions for 2026. And these aren't moonboy takes. This is institutional capital logic. Guys, they manage billions of dollars. They talk to allocators, endowments, ETFs, and regulators. So today, I'm going to walk through all 10 predictions, add some real world commentary, and tell you which ones I strongly agree with, which ones are underappreciated, and which ones might surprise people the most. So let's get going here with the Bitwise top 10 crypto predictions of 2026. All right, guys, welcome back to the channel. We got the Bitwise top 10 predictions of 2026 coming at you right now. Without further delay, let's get going here with the Bitwise predictions. Number one, Bitcoin breaks the 4-year cycle. So the prediction here from Bitwise is that Bitcoin is going to break its historic 4-year cycle. You know, everybody says the 4-year cycle. Up, boom, major drop. Up, major drop. Bitwise is predicting that it will break a historic 4-year cycle and post a new all-time high in 2026. This is huge. For the first time, Bitwise here is openly saying Bitcoin may no longer be a clean halving pump, then the dump. Why? Because Bitcoin now trades inside ETFs, pension funds, long-term capital pools, risk parity portfolios. And guys, this smooths the cycles. This is why institutional adoption of some of these cryptos is so important. It doesn't kill volatility, it just restructures it. Bitcoin is going to start behaving less like a speculative commodity and more like a macro asset with supply constraints. This is by far, in my opinion, one of the most important predictions on the list, and I wholeheartedly agree with this one. I do think Bitcoin is going to reach new highs in 2026. I also think the volatility is going to start to go down and is going to behave more like the digital gold that everybody's been talking about for years and years and years. The days of Bitcoin, low volatility, and digital gold is coming. All right, Bitwise prediction number 2 for 2026. Bitcoin's volatility shrinks, possibly staying lower than Nvidia's as an institutional participation deepens. All right, so what does this mean? It kind of sounds insane until you think about it. Nvidia basically is now an AI proxy, right? Let's be real. Nvidia, oh gosh, I mean, that valuation is so sky high. It trades on hype, it trades on emotion, and it trades on the future of AI. Not quite real fundamentals, right? So Nvidia is an earnings driven stock, albeit the PE ratio is astronomical. It is an earnings driven stock. It's also a macro sensitive equity. Bitcoin, on the other hand, no earnings, no management, zero dilution, and no surprises. As ETFs dominate the flows, Bitcoin volatility will compress. Okay, I'm going to say that again. As ETFs dominate the flows, Bitcoin volatility will compress, which is bullish in the long term, but can be pretty frustrating short term for traders. This is how Bitcoin, guys, is going to become boring money. However, boring money attracts trillions and trillions. So look for volatility to shrink in Bitcoin. And I agree with this one as well. I totally agree. ETFs and the big boys playing in Bitcoin, they don't sell. Okay? People aren't buying Bitcoin in these ETFs to trade the volatility. They're throwing it away as a 5 or a 10-year play, which is going to make the volatility majorly compress. So again, Bitwise is spot on with number 2. On to number 3. The prediction is ETFs absorb more than 100% of new Bitcoin, Ethereum, and Solana supply as institutional demand accelerates. This is already happening in Bitcoin. We've talked about it in the past, where the amount of Bitcoin mined per day is less than the amount of Bitcoin the ETFs are purchasing. That creates a supply shock. So when ETFs buy more Bitcoin than miners produce, price, it just has to adjust upward, right? It's supply and demand dynamics at its finest. And it's what was Bitcoin was designed to do from the start. It just took the halving cycle, 10 or 11 years to get to the point where the amount mined is less than the amount purchased. Guys, also, if Ethereum and Solana ETFs reach similar demand levels, the supply shock becomes structural and not cyclical, which means we don't have these ups and downs. We have a constant upward pressure because there is no supply and people want to buy it. This would be one of the clearest bullish arguments for large cap crypto in 2026 if it does play out. And guys, I am leaning towards this. I totally agree with them. When you have the massive players like Michael Saylor buying, he probably wants to buy 5% of Bitcoin or as much as he can, right? He's buying it up. Same with Tom Lee and Ethereum. They are buying hand over fist all of these coins. And if the demand for these tokens, right? The demand for these coins is higher than the amount produced. And Ethereum is also a deflationary asset, right? It's built into their model. They do produce more, but it tapers off to the point where it becomes deflationary. The demand for them is going to outpace the supply, so there will be a constant upward pressure. So man, Bitwise, 3 for 3, guys. You guys are nailing these predictions. I totally agree with all of them so far. Number 4 from Bitwise is crypto stocks outperform major tech stocks as Wall Street adapts to digital assets. So think, guys, Coinbase, mining companies, infrastructure providers, tokenization platforms. Wall Street understands stocks better than tokens. So capital will flow here first. This kind of mirrors, the early internet era. The picks and shovels will outperform the apps. This is going to be a quiet rotation many retail investors will miss. So again, the picks and shovels first will outperform the apps. And let's go through that list again. These are the ones I've identified that could, possibly benefit. Coinbase, mining companies. What companies are mining these tokens? 21 shares, American Bitcoin. Infrastructure providers, right? Data centers, tokenization platforms. All of these are going to benefit. I also agree. I agree that Wall Street as a whole and big firms, they're not going to throw massive amounts of money onto individual chains. What they're going to do is look for indirect exposure through what they know, which is stocks. Coinbase, if Kraken comes public, right? Those are going to benefit through indirect exposure to crypto. Okay, prediction number 5 from Bitwise. Here we go. Prediction markets. Open interest hits all-time highs, driven by mainstream adoption and regulated platforms. So this isn't about gambling. Prediction markets, price future expectations, right? It's not gambling. It's pricing in future expectations of events happening, right? It aggregates global information, replaces polling and sentiment models. So as regulation clarifies, these will become financial primitives. And this is a very underrated call by Bitwise. So honestly, guys, I don't know enough about the prediction markets to give you some real insight here. So what I would just say is on this one, do your own research. I'm more of a crypto guy and a stock and option guy. Prediction markets are so new, and honestly, I don't dabble in them. So that is a really interesting one for future exploration. Bitwise is probably spot on. I just don't know enough about this one to give you any actionable intel. So let's move on to number 6. Stablecoins will face scrutiny for their macro impact, especially in emerging market FX regimes. So stablecoins are already dollarizing emerging markets. They're bypassing weak banking systems, competing with local currencies. And governments, guys, they are not going to be able to ignore this forever. So it doesn't kill stablecoins, it legitimizes them. But regulation is going to become unavoidable. Go look up. There's a clip of God, I forget the guy. It was a guy from Russia on their parliament. Um, he was talking about how Trump's crypto move is basically debasing the dollar, and he was he was not a fan of using crypto to erase the U.S. debt. Okay, look this up. This is where the scrutiny is going to come in. Is are stable coins setting us up for a disaster, or are they going to be our savior? Right? They are legit, but the way that they could be used and to suck up all the liquidity and all the treasuries and erase our debt through crypto becomes a really interesting political talking point, because other countries see what the United States is doing, and I don't think they really like it. So watching the scrutiny around stablecoins, I know stablecoins are going to be huge, but they are also going to be scrutinized for the role they're going to play in dollar debasement and the erasing of the US global debt. All right, number 7, almost done here. Number 7 from Bitwise. On-chain vault assets, ETF 2.0, could double assets under management, expanding the frontier of on-chain institutional capital. This is where Wall Street meets DeFi. So think tokenized funds, programmatic compliance, yield strategies with transparency. Institutions want exposure without trusting black boxes. This would kind of be, we'll just call it DeFi growing up. Okay, so pay attention to this one. This one's kind of a stretch, I think. I don't know if it'll be 2026. To me, this seems more like 2027. I think the infrastructure needs to grow up a little and prove itself before we double assets under management. But you never know. Bitwise may be spot on. I think this one might just be a little bit early for 2026. Number 8. Bitwise prediction number 8 for crypto. Ethereum and Solana reach new all-time highs, contingent on supportive regulatory clarity, and this would be the Clarity Act. Without even going into it, just this at face value, 100% agree. I think Ethereum and Solana are diving up. But as Bitwise states, this is conditional, right? It is going to depend on regulatory clarity and the Clarity Act, which hopefully comes out in 2026. There's already been a story that the Clarity Act will not pass or will not be up for discussion in 25. They're punting it to 26. And we know in 2026 that there's going to probably be another government shutdown, right? Or they're going to have to come up with another bill to keep the government open, and that takes a while. So if we can keep the government open and get the Clarity Act passed in a favorable manner for crypto, I totally believe ETH and Solana can reach the new all-time highs like Bitwise is predicting. So we're going to need that clarity. We're also going to need continued high demand in the ETF flows. Continued network usage. So the story that just got published yesterday about Visa using Solana and USDC is massive, right? That is a massive institution in Visa deploying a real world solution on Solana. So that is increased network usage. That is something that shows us that institutions are deploying this at scale on these networks. So when I say do your research and watch the news, it's those types of stories that solidify the narrative. But structurally, guys, Ethereum and Solana are the two most institutionally relevant smart contract platforms. That's not hype. That is just capital alignment. I mean, Bitmine buying hundreds of $1,000,000 of Ethereum and Visa working with Solana, it's not fake. That is real business and real money. All right, number 9. And I find number 9 is very interesting. And let's just read it. Half of Ivy League endowments will include crypto exposure, signaling deep institutional adoption. This one is massive. Endowments, guys, they move slowly. And endowments, like the way endowments work is they need to look long term, not 5 years, decades. So if massive Ivy League endowments will include crypto, Bitcoin, Ethereum, this is a massive signal of legitimacy because once they move, others will follow. If an endowment is buying crypto, it shows that whoever is running the money for that endowment firmly believes that that asset will be around for years and years and years to come and hold its value, if not go up significantly in value. And guys, this it relates back to number 2, I believe, how crypto will become permanent in portfolios, which will reduce the volatility. So I don't have any like real insight or research into if this will be true. I do know that I think it was Harvard's endowment. Don't quote me on this. It was Harvard. They have already bought some Bitcoin. So this extends that out to say half of them will include crypto. So that would be an interesting one to follow. We'll keep an eye on that. All right, finally, number 10. The US launches 100 crypto-linked ETFs, dramatically expanding regulated capital channels. This would be the final unlock of all the potential because ETFs are easy, regulated, scalable, tax efficient, and would open crypto to advisors, retirement accounts, institutions that can't touch tokens right now. And this is how crypto stops being kind of like an alternative and becomes normal to everybody. So I'm agreeing with this one too. Just the wave of ETFs we've seen in the latter half of November 25 into December 25 is huge. And if we're talking all of 2026, I could easily see 100 crypto-linked ETFs. We're talking spot ETFs for individual tokens. And what I'm hoping we start seeing is something like the NASDAQ or the S&P 500, where you can buy an ETF and get exposure maybe to the top 25 or 50 tokens at one time. That would be massive, massive for the space. So the big picture takeaway, guys, Bitwise isn't really predicting hype. They're predicting structure, real world fundamentals, less volatility, more regulation, more institutional ownership, more on-chain finance, fewer wild cycles. Crypto doesn't disappear. 2026 is going to be the year that crypto matures. And it looks like it is also going to be the year that this shift into maturity is going to become obvious. So again, guys, this isn't financial advice. These predictions aren't guarantees, but they are a roadmap of how serious capital is thinking. And the real question really isn't, will crypto survive? It'll survive. It's here to stay. But it's how much of the financial system will move on chain. I think it's going to be all of it eventually. By 2030, where everything's going to be on chain. But we're going to keep our eyes open. We want to see that continued momentum. So all right, guys, drop a comment down below. Which Bitwise prediction do you think is most important, and which one do you think they're wrong about? And if you want more institutional level crypto breakdowns, price predictions, and news, make sure you like this video and hit subscribe. And remember, this is the world of crypto. Things are volatile. They move fast, which is why we need to stay focused and lock in, because the world is about to be tokenized.